Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence. If there is one thing that impacts the markets more than fundamentals, it's behaviors of investors, which can be anything but rational during many moments. Mr. Warren Buffett and Mr. Ben Graham have referred to the market as a manic depressive person who can act in ways that are unpredictable. In this video, let's take a look at what Mr. Seth Klarman, one of the greatest value investors of all times, has to say about behaviors of investors and what lessons can be learned so that we are conscious about these behaviors. Before we start, please smash that like button and make sure to subscribe to receive more such videos on wisdom from great investors. Also, make sure to check out our playlists, which have plenty of lessons from super investors in the description below. Now let's dive into some of Mr. Klarman's views on behaviors of investors. These views are collected from various sources and provide small nuggets of wisdom for us to consider and reflect upon. In investing, as in most things, people like what is popular, trendy, exciting, and dislike what is boring, out of favor, and stigmatized. They like assets that have been rising and shun those that have been falling. Investing, when it looks easiest, is at its hardest. The overwhelming majority of people are comfortable with consensus, but successful investors tend to have a contrarian bent. Most people lack the courage and stamina to stand apart from the herd and tolerate short-term underperformance in order to reap long-term rewards. Most investors tend to project near-term trends, both favorable and adverse, indefinitely into the future. This is actually a reference to investors having a short-term memory. The daily blips of the market are in fact noise that is very difficult for most investors to tune out. Investors unfortunately face enormous pressure, both real pressure from their anxious clients and their consultants, and imagined pressure emanating from their own adrenaline, ego, and fear to deliver strong near-term results. Pressure to keep up with the peer group renders decision-making even more difficult. Human nature is such that emotion frequently overwhelms reason, causing security prices to overshoot in both directions. It is psychologically hard to fight the crowd, to take a contrary stance and stick with it. Worrying about what can go wrong can lead to protracted periods of underperformance. Understanding how our brain works, our limitations, endless mental shortcuts, and deeply ingrained biases is one of the keys to successful investing. At Baupost, we believe that it is sometimes easier to predict how investors will behave in certain situations than it is to predict a company's bottom line. At times of market extremes, by avoiding emotional overreaction and remaining aware of our biases, it may be possible to know market participants better than they can know themselves. In investing, whenever you act, you are effectively saying, I know more than the market. I'm going to buy when everybody else is selling. I'm going to sell when everybody else is buying. That is arrogant, and we always need to temper it with the humility of knowing we could be wrong, that things can change, and acknowledging that we have a lot of smart competitors. Thus, in worrying about all the things that can go wrong, you can prepare, you can hedge, and you must remember to sell fully priced securities so that you are underexposed when things go badly. All these elements give us the courage to follow our convictions. The stock market is the story of cycles and the human behavior that is responsible for overreactions in both directions. Here's how to know if you have the makeup to be an investor. How would you handle the following situation? Let's say you own a Procter & Gamble in your portfolio and the stock price goes down by half. Do you like it better? If it falls in half, do you reinvest dividends? Do you take cash out of savings to buy more? If you have the confidence to do that, then you're an investor. If you don't, you're not an investor. You're a speculator, and you shouldn't be in the stock market in the first place. Alright, that's it for now. Hope you enjoyed and learned from these small nuggets of wisdom from Mr. Seth Klarman. Please smash that like button. And for more wisdom from great investors, check out the description below or the playlist above, or head to the channel's page. And subscribe to make sure you receive more such videos. Thanks for watching.